Bitcoin buyers have given back 71.6% of the rally from the 2nd March low to the 4th March high, retreating from a peak of $74,091 to a low of $67,794 on 6th March, retaining only 28.4% of the move. 3 days of strong buying followed by 2 days of selling. This is a confused market, with neither side willing to show serious conviction. The key question today is whether buyers are simply retreating after testing higher levels before a more concerted assault, or whether this pullback signals something more concerning. In today's Bitcoin technical analysis video, we examine how to interpret Bitcoin's rally and retreat within the dominant 2-bar range that has controlled price since early February. We define the price zones that are now boxing in Bitcoin, overlay the Fibonacci resistance and support zones that extend our analytical focus, and identify the precise levels that determine whether this market is consolidating for a move higher or stalling ahead of a more significant reversal. By the end of this analysis, you will know exactly how to read Bitcoin's current price action, where the equilibrium price sits, which zones are defining the battle between buyers and sellers, and the specific price levels you need to be watching if you trade or invest in Bitcoin right now. Welcome back. We are Bitcoin Capital Gold, built for serious traders and investors who want structured technical analysis and capital discipline across Bitcoin and gold. Every day, we answer 5 structural questions. Are Bitcoin's timeframes aligned? Where are Bitcoin's key price zones? What is Bitcoin's volatility signaling? What macro events could affect Bitcoin prices? And what must change to shift Bitcoin structure? The timeframes are the skeleton of our price action. They provide the framework we hang our analysis on. The yearly, monthly, and weekly swing charts give us that framework. The yearly chart remains bullish, but with a swing direction that is currently down. Price has been working lower since the year opened at $87,626. The monthly chart is undecided with a downward directional bias. 3 consecutive bearish monthly closes before March, each finishing below its open. The weekly chart is a confirmed downtrend. Whilst we are in a higher time frame uptrend, we are firmly controlled by bearish sentiment. Since the drop to the 6th February low at the precise round number of $60,000, we have had no structural change on the weekly chart or any higher time frame. That $60,000 level has not been broken and has not yet been seriously challenged. While price remains above this structural low, buyers are not showing conviction to push it lower. We deal with what we can see. And what we can see is a market still firmly in the grip of bearish sentiment above a floor that has so far been held by the sellers. The dominant 2-bar range of 5th and 6th February continues to overshadow all price action. Every session since traded within the boundaries set by the 5th February high at $73,168 and the 6th February low at $60,000. Price remains contained. But buyers have now shifted the balance above the equilibrium point of that dominant range. Friday's close was $68,170 compared to the equilibrium at $66,584. That is $1,586 above the midpoint of the dominant range. Above equilibrium tells us buyers currently occupy the high ground within the range. Below it tells us sellers are back in control. That single reference point, $66,584, is the line in the sand that defines who holds the balance of power right now. You will want to look at yesterday's video where we went through bar by bar Bitcoin's rally. We will leave a link in the description. Using round numbers, we can precisely box in the Bitcoin market. Price has been tussling between 2 distinct zones. The lower zone, between $60,000 and $65,000, is where Bitcoin established its base in February. The upper zone, between $70,000 and $75,000, is where buyers attempted to push last week. Between them lies the $65,000 to $70,000 corridor, the contested middle ground where price is currently operating. This $15,000 total structure from $60,000 to $75,000 is defining the entire price action framework. Everything happening in Bitcoin right now is a negotiation within these boundaries. Overlaying our Fibonacci work sharpens that picture further. On the upside, our Fibonacci resistance zone sits between $74,612 and $75,160, sitting directly within the upper price bracket and representing the precise level buyers must close above to demonstrate genuine structural commitment. On the downside, our Fibonacci support zone sits between $63,714 and $64,198, the floor that sellers have so far been unable to break on a closing basis. The Fibonacci zones give us precision within the round number framework. Together, they define a battlefield with clear boundaries on both sides. Now here is something in this week's price action that is easy to miss but carries significant weight. Despite the two-day retreat from the 4th March high, Week 10 closed bullish, the first bullish weekly close in 4 consecutive weeks. 4 weeks of bearish weekly closes followed by a bullish one does not confirm a trend reversal, but it does confirm that buyers are mounting a serious challenge to the prevailing weekly downtrend. A single bullish weekly close inside a downtrend is an early warning signal, not a structural change, but it earns attention. Reading the daily sequence gives us the full picture. Monday, 2nd March, buyers opened at $65,959 and closed at $68,947, a strong bullish close of nearly $3,000 above the open. Tuesday was a pause, an inside bar with a lower wick showing sellers tested lower but buyers defended. Wednesday, 4th March, was the decisive session. Buyers drove from $68,263 to a high of $74,091, closing at $72,752 on a range of $6,727, the largest bullish session since the dominant range bars was set in early February. Then the retreat. Thursday closed at $70,808, giving back $1,927 from open to close. Friday extended that retreat, closing at $68,170, a further $2,760 bearish deficit. 2 days of selling gave back 71.6% of the entire rally range. What buyers must now demonstrate is that this retreat is a consolidation, not a reversal. The equilibrium at $66,584 is the level that answers that question. As long as price holds above it, buyers retain the structural advantage within the dominant range. Volatility tells us the energy behind the move, and the pattern over recent weeks is instructive. Weekly ranges have been building steadily. Week 8 produced a range of $4,471. Week 9 expanded to $7,501. Week 10 reached $8,791, the largest weekly range in 3 weeks and the first to close bullish. Rising ranges with a bullish close signal buyers are committing energy, not just drifting higher. The monthly range for March so far stands at $8,942, modest compared to February's $19,344, which tells us the market is still in a phase of price discovery rather than directional expansion. When the big move comes, it will announce itself through range expansion. We are not there yet. On the daily close to open data, Wednesday, 4th March, stands apart. A bullish gain of over $4,400 from open to close, the largest single-day buyer commitment since the dominant range bars of early February. The 2 retreating sessions, Thursday and Friday, both closed bearish on contained ranges. Sellers are present but not accelerating. A market where sellers retreat in contained steps after a large bullish session is not the same as a market where sellers are in full control. From a macro perspective, 3 developments are shaping the environment. The US dollar index made two strong pushes above the $98 resistance level on 2nd March and 4th March, but has since stalled. It is still deciding whether to hold above that level or retreat below it. A dollar that breaks resistance and then stalls removes a headwind for Bitcoin. If the dollar begins to roll over from $98, that would be a constructive development for risk assets. Gold produced a notable sequence this week. The 2nd March session was a strong bullish kicker bar, indicating directional intent to the upside. But the very next session on 3rd March produced a bearish engulfing candle that erased 6 days of buying in a single bar. From 23rd February through to 2nd March, all taken back in one bar. Gold is navigating the same question as Bitcoin. Was that bearish session a reversal or a shakeout? Both markets are at decision points simultaneously. The Nasdaq remains range-bound between $24,500 and $25,500, but Friday's session produced a strong bearish bar pushing to a low of $24,601. That is within reach of the lower boundary. A close below $24,500 would represent a meaningful deterioration in equity sentiment, a potential headwind for Bitcoin at precisely the moment buyers are attempting to build a case for higher prices. Here is what the complete picture is telling us. Bitcoin is in a holding pattern within the dominant range, above equilibrium, below the Fibonacci resistance zone, and above the Fibonacci support zone. Buyers made their strongest statement of the year on 4th March. Sellers responded with 2 days of measured retreat, reclaiming 71.6% of the rally range. Neither side has landed a decisive blow. The levels that define the outcome are clear. On the upside, a close above the Fibonacci resistance zone between $74,612 and $75,160 would break the dominant range ceiling and represent a structural shift in favor of buyers. On the downside, a close below the equilibrium at $66,584 hands control back to sellers within the dominant range, and a close below the Fibonacci support zone between $63,714 and $64,198 signals the entire buyer case from February has failed. Between those two zones, we have a stalemate, a market still deciding. We monitor. We do not anticipate. Discipline over prediction. Every day at 7 a.m. EST, we produce institutional technical analysis on Bitcoin and gold. Capital allocators managing their own Bitcoin and gold capital need quality structured analysis. Gold is breaking all-time highs as a strong store of wealth in the backdrop of global tension in Ukraine and Iran. Bitcoin is maturing as an asset class and redefining its relationship with gold. Today's conversation is about how Bitcoin and gold can coexist in a conservative, balanced, or aggressive portfolio. This channel answers these questions to help you make informed, disciplined decisions. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. Bitcoin and gold are shaping the financial landscape of the future. This is the channel that discusses this maturing relationship.